Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Thursday, January 19th, 2017, and this is the Daily Report for Gold and Silver. Now, less than 15 hours away until President-elect Donald Trump takes the oath of office and becomes our 45th president. We are in inauguration mode, so to speak. And we are watching the markets very carefully to see how they react today, tomorrow, and then especially next week as Trump has his first chance to put pen to paper. As of the markets close today, we are looking at the precious metals complex as a whole trading lower, nominally lower, with dollar strength contributing to that fact. When we look at gold, gold is currently at $12.0470, putting it down about $7.40 on the day. This, of course, being most active COMEX futures. It's traded to a low of $11.9540, and that is important. We'll talk about that when we pull up our first chart, and a high of $12.0640. So not that much of a range, but nonetheless closing under pressure today. Now, gold was down about 0.6%, but when we look at silver, you can see that that had a much more considerable drop on the day, closing at 1701 and change, putting it off by about 25 cents. The low on the day, 1674, and the high, 1712. So traders, the first chart that I do want to look at on today's show is a daily chart, COMEX Futures Gold standard candlestick format. And I draw your attention to the low of today. Of course, if you recall from yesterday's show, we recommended that aggressive traders could go ahead and add to their long position and maintain the current stop. Our current stop level is below 1195. The low of today was 1195.40. So we certainly were able to hold those positions, but it was a little bit too close for comfort to be quite honest with you. And I am expecting ones who have these positions to keep this particular stop more on the loose side than the tight side. So when I say below 1195, I would look to place anywhere between 89 and 90 in terms of the actual point at which you're going to put the exact number of that stop on. But nonetheless, below 1195, that stop has held. It is intact, but we are seeing some signs of weakness in the market. There's absolutely no doubt about that. Now, today's weakness is only partially due to dollar strength, and at the same time, with the inauguration set for tomorrow, and then, of course, Monday, a new chapter in American history, there's really some uncertainties that will begin to flush themselves out, and they will be replaced with the governing style of President Trump now that he has been inaugurated and been sworn in, taking the oath of office. So we want to watch this position closely. Now, even if we get stopped out roughly in this area, we would get stopped out with a small profit. We got in, of course, our first position at 1180, and then, as I said yesterday, we took one on at about 1203. So it will be interesting to see what happens in overnight trading tonight as well as tomorrow. I expect all eyes will be trained on the inaugurations rather than the financial markets, but we will also have a lot of time once the inauguration takes place to see the reaction in the financial markets immediately following that. For right now, maintain your current longs, maintain your current stop level. And traders, I've pulled up a daily chart. This daily chart is in a Japanese average format, and we can clearly see that the action over the last couple of days, and especially today, we now have a red candle because it traded and closed below the midpoint of the prior candle, and that could be something that can be signaling a key reversal in the market. Typically, when you have this many consecutive higher days up, when you do get a indication or a color change, that in many occasions is going to be that first indication that you've got a directional change in the market. We've seen this before. Now, we have seen instances such as here where you get a color change and then a return to the trend. But the one thing about a moving average chart, the Japanese moving average charts, is they do have the ability to filter out the noise. And so in terms of technical studies that I look at, the fact that we've had a basic change here is my reason for a heightened sense of awareness or concern about our current position. We're protected, of course, with our stops. We've already locked in profits, but I would certainly like to see if this market has the ability to move to our initial target, which sits quantitatively higher from this area and is up at around anywhere between 1240 and 1260. And traders, finally, do want to take a look at a weekly chart of gold, and we can still see that even with this most recent price drop over the last couple of days, we have another week in which, if we see a close here or above, will be our fourth consecutive week of higher pricing, and our fifth week in which we have seen this market trade to a new high on the week. Of course, this first week it did have a lower close on the week, but that was also really the bottom of the market just after the market had hit 1123 the following week, mid-December to the last part of December. Now, equities markets also trading under pressure today. The Dow Jones Industrial Average at its low point was trading at 19,677, so down well over 100 points, pairing some of those gains as we came into the close to close off by about 72 points at 19,732, and that was a net drawdown of almost 0.4%. Standard & Poor's, same net change, almost 0.4%, down 8 points at 2263. And then the NASDAQ also trading under pressure, but in the case of the NASDAQ, we're going to say it's fractionally unchanged. As you can see, net change is less than even 0.1% on the day. Now, the dollar itself has been all over the boards recently. In essence, we're looking at about a 0.2% gain on the day at 101.14. The low has been 197 with a high of 101.73. And then lastly, want to take a quick look at crude oil, which closed up about 31 cents per barrel on the day, a net gain of 0.6% at 51.39. So traders, as we get closer and closer to Inauguration Day, we can see that the incredible optimism which occurred immediately following the election results, and that would occur right here. This, of course, is the beginning of November. We are looking at the Dow Jones Industrial Average, and we are also looking at a weekly chart. So the election week is this long green candle here. We can see that since that point in time, and especially through November and the first part of December, we had a tremendous acceleration in which we saw the Dow Jones Industrial Average on a weekly basis close at a new high, close at a new high, new high, new high, new high, a bunch of consecutive closes closing at a new high up till the last 4 trading weeks. At that point, we saw some real resistance. Oddly enough, that resistance comes in at 20,000 on the Dow Jones Industrial Average. That is the elusive carrot that we haven't been able to take out. And even more than that, let me go ahead and change my pointer. And the one thing that we can absolutely say is that we're really seeing, at least on a technical basis, the first signs of a rounded top. That rounded top that we have seen before has definitely been a precursor to lower pricing. We have seen points in which you'll get an extended period of time in which it trades sideways before moving up. But for the most part, when we see these rounded tops like in here, it is a precursor to lower pricing ahead. We are looking at a dollar chart. This, of course, being a standard candlestick chart, each candle representing 1 week of trading activity. We talked about the fact that as we saw gold have that three-river Morningstar bottom, silver have a bullish Harami bottom, we also saw on our weekly pattern a candlestick pattern called the three-river Evening Star. On the dollar index, we identified a definitive level of resistance that begins at roughly 103 and tops out below 104, and that's these highs that came in, not necessarily the bodies. but we have also had a market that hasn't been defined as a strong trend with concise moves to either the upside in a rally or a downside, as we're seeing here, as the market has moved to lower ground. In fact, what we have seen is the market trade solidly lower one week, consolidate the next week, solidly lower the next week, this week being a point in which we're getting that congestion once again and consolidation. If all things being equal, we have a continuation of the way that we have seen the dollar index in terms of how it trades unfolds, we could expect to see a lower dollar going into next week. So as we move closer to election day, my recommendation is to maintain our current longs in gold. Of course, we went long at 1180, and then long, we added to that position yesterday at 1203. Market seems to have closed roughly at about 1205. Stops need to be under 1195. As far as our silver trade goes, our recommendation is to maintain your current long position in silver, maintain our current stop. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you tomorrow following the inauguration for the weekly wrap-up and review.